Hi, welcome to the Energy Question with David Blackmon. I'm David Blackmon, your host. Today, my special guest is Bernadette Johnson, the General Manager for Power and Renewables for Enverus, which is happens to be our title sponsor for our podcast. Bernadette, welcome to the show.
Thank you so much for having me. Happy to be here.
Yeah, thank you. I really appreciate your time. I know you're an incredibly busy person. It's your travel schedule is amazing to me. Before we get started on questions and talking about the situation with the energy industry today, tell us a little bit about your portfolio there at the company.
Sure, absolutely. So I lead our Power and Renewables division here at Enverus, but Enverus is quite a bit more. So we're a single source platform for the management, development, and acquisition of the entire energy value chain. From early stage investment to full scale development, Enverus provides the platform and analytics to support your changing energy strategy. So we call this intelligent connections, but in a nutshell, we're the largest dedicated to energy software as a service company.
Yeah, it's been amazing to watch how the company has grown over the last decade. I first met one of the co-founders of the company, Alan Gilmer, when it was Drilling Info. I think back in 1999, I'm pretty sure here in Fort Worth at a industry conference. And of course, at that time, it was the company was started as this platform that had digitized, gone around the state of Texas to all 254 county courthouses and digitized the land and lease records for the whole state of Texas. And it was a real amazing innovation in the industry. And now you're this company that offers this incredible array platform of in analytics and intelligence services to how many clients? 6,000 clients, I think, worldwide?
About 6,000 clients worldwide, about 500 of those are even in Power and Renewables. So
Wow.
we're not thought of as a brand name yet in Power and Renewables. I think we're getting there.
Yeah.
But we've got about 500 clients, and we've invested about $200 million in this space.
Wow. Amazing. Well, I wanted to talk to you today about the energy transition, first of all, which, is a point of growing prominence in the energy industry and a little controversy, I guess. One CEO of an oilfield services company up in Denver recently told a conference up there that he didn't think there was actually an energy transition happening right now, that it was more of a energy addition, right? That yes, I mean, wind and renewables are growing, but actually oil continues to grow as well. What is Enverus's view on what's happening with the transition right now? Is it really a transition, or is it more of an addition?
Yeah, good question. I'd probably sit somewhere in the middle. So I don't love the term transition, and I think mostly because that kind of implies a linear, steady state, smooth transition
Right.
to whatever comes next. And we're not seeing that. I call it energy evolution sometimes. I think even that kind of misses the mark, because what we're seeing is a lot of change. We're seeing renewables, we're seeing wind and solar for the electric power grid. We're seeing electric vehicles, now over 10% of new vehicle sales worldwide. And so we are seeing what I call kind of step changes. And I think it's early innings. And what's going to come next is, I think, going to be even more impressive step changes. But it's going to be tied to things like battery chemistry breakthroughs and things that we can't predict
Right.
yet. So I think it's messy. I think it's, when you just hear energy transition, it seems really easy. Like, we have the science, we have the technology, we know what to do, and we actually don't. All of those things are really up in the air right now.
Yeah, and a lot of it's going to depend on government policy, like this Inflation Reduction Act, right, that was just passed. Is so much of it, $369 billion, I think, is targeted subsidies and programs to encourage renewables, right, and to help fund projects across the country, correct?
Absolutely. A big chunk of it, that Inflation Reduction Act, or the IRA, a lot of it is targeted at renewables, whether it's supply chain, whether it's incentivizing production of materials here in the US so we're not so dependent on other nations, whether it's supporting the workforce that will underpin this part of the industry. There's a lot of pieces to the IRA, but certainly a lot of it was really tied to impacting climate change and really growing this part of the economy here in the US.
Right. Yeah. It also included some of the money actually was targeted not just to renewables too, but to things like carbon capture projects, right? That also help in terms of reducing emissions.
Absolutely. There's a big chunk of that. And I think that's another important point is that the overall energy industry, it's the world's largest industry. It's growing, right? It's growing quickly.
Yeah.
So renewables are growing as a part of it, and as a percentage terms, growing pretty quickly. But demand for oil is increasing. Demand for natural gas is increasing. Demand for electricity, electrification broadly, is increasing. And so all of these things are increasing. And really, it's the whole mix that needs to grow, expand, and evolve over time, including things like carbon capture, things like hydrogen, perhaps, things like geothermal, if you're talking about the power sector. And so there's pieces within the IRA that target each one of these. It's not just renewables.
Yeah.
It's really the whole energy mix.
Yeah, and you know, a lot of those. Of course, I've written a lot about carbon capture over the last year and a half because it seems like not. I mean, I don't know that it's a real trend within the industry, but you have this kind of synergy between an oil company and the technology involved and the expertise required for carbon capture that's really very similar, right? And it seems like almost a natural place for some oil companies to try to migrate as they look for ways to be a part of the transition.
Absolutely. I think it's interesting. If you think of carbon capture as in the most simplified terms, it's really permanent storage. And we know how to store commodities. So if we are extracting the CO2 and then we're storing it in a depleted reservoir or a salt cavern or the different tools we use today to store natural gas for the heating season, a lot of those skills, whether it's the engineering, the know-how, all of that actually lives predominantly within the oil and gas sector today. So the big oil and gas companies are at the forefront of that technology, and they will very likely be the folks that figure out those breakthroughs, figure out how to economically extract CO2 and store it long term. And so those pieces we watch closely. You look at any of the big oil and gas producers, they're investing there. They're really focused there from an R&D standpoint.
Yeah, and of course, I'm in Texas, right? And so I look a lot at what's happening in Texas. There's a ton of opportunity for CCS along the Texas and Louisiana Gulf Coast, correct?
Exactly. Whether it's depleted reservoirs, so those reservoirs used to hold oil or gas, we've pulled the oil and gas out. Those depleted reservoirs are ripe for CCUS, or salt caverns, like that whole Gulf Coast area. We have a lot of salt cavern storage for natural gas. That same kind of technology or facilities can actually aid in CO2 sequestration. And so that part of the country, certainly, there's a lot of potential, a lot of research going in right now.
So you mentioned demand for oil and gas is growing currently, and I think that's a consensus view. As this transition progresses, what does Enverus see for the future of oil and gas? Let's look out a decade, 2 decades, 3 decades from now. Is it going to continue to grow, or is it going to become more specialized?
Yeah, that's a good question. I would say you're going to get a different answer depending on who you ask. So even here internally at Enverus, we debate that pretty frequently. I would say I don't think anyone sees peak natural gas demand happening anytime between or before 2070. And even that, I think, is an aggressive timeline. So natural gas going to continue to be an important part of the energy mix for a very long time and very likely outpace all of our lives here.
Yeah.
Oil's a little trickier, right? So folks will tell you peak oil demand in 2026 or 2027 or 2030 or 2050. So those dates they're all over the map. I would say the world is heavily dependent on hydrocarbons, and oil is an important part of that. So 85% of the energy mix is hydrocarbons today, and that includes coal. But the natural gas and crude parts of that, they're still growing. We still need them for transportation fuels. We need them for electricity. We need them for plastics and rubbers and all the other things that you need that you don't think about every single day that we all use. So I would say I don't see a line of sight to a specific date when we'll hit peak oil demand yet. I think any dates that you see are basically it's optimistic, right? They're banking on breakthroughs in battery chemistry or other technology that's going to get us there. But with today's technology, we're not there yet. And so I see them continuing to grow. Oil will grow slower, but it's still growing, and it's going to continue to grow for a long time.
Yeah, you mentioned peak oil. I just as an aside, I did some research a few years ago. I was in a debate with a guy about it, and the first mention of peak oil theory that I was able to find took place in the United States in 1886. So we were about to run out of oil at that time, supposedly. So it's quite a topic, and we could spend hours talking about that. But let's talk about battery technology. We do have, I think, a lot of promising developments in the battery technology space, but it feels like it's always just around the corner to me. What does Enverus feel like is a viable kinds of technologies that are kind of in the near future that can really help the progression of renewables to become, a real replacement for baseload power in the energy sector?
Yeah, good question. So we get a lot of questions on battery, and I think a lot of the public folks, they believe, oh, we already have batteries. It's really just a matter of deploying them. But it's kind of orders of magnitude more complicated than that. So we haven't had a breakthrough in battery chemistry in about 40 years. There's some things coming. And this is an area where we're talking about physical chemistry, and we will have breakthroughs. Timing that is really challenging. And just like you said, I think that was perfect. It seems like it's always right around the corner, but we never quite get to that corner. Even Elon Musk's battery day, I think, and that was a couple of years ago.
Right.
It's interesting because he was mentioning, well, 3 years from now, we're going to have a breakthrough. Well, 3 years is just long enough that no one's really pricing that into your stock price or your share price, and no one's really anticipating it immediately. But it's also not so long that people think it won't happen. And we still don't have those breakthroughs, right? We will, but we don't have them yet. Yeah. So some of what the world is working on, whether it's national energy laboratories or whoever it is, you've got some breakthroughs we're seeing on the vanadium front, right? So I think that one's one you've even written on.
Yeah,
that
just
really
recently, yeah.
Mm-hmm. We've got other efforts around replacing cobalt with nickel in lithium-ion batteries. So that one's one that Elon Musk talks a lot about. That's really important, not just because cobalt it's a rare metal and it's hard to come by, and the supply chains are pretty locked down in, I think it's China or the Dominican or the Democratic Republic of Congo, where we don't really want to be tied to. That one's tricky. That one's also a cost thing. So if you look at EVs today, our ability to significantly lower the cost to bring those vehicles into a price range that's accessible for kind of the middle class or even the up and coming developing nations, we have to have some cheaper batteries. And so that's a key part of that. But again, we're not quite there yet. Other things like sodium ion to replace lithium ion. Right? Sodium is very plentiful, and it's actually not as prone to lighting on fire as other materials. So that's another one where we're seeing some
That's
research.
Good.
It would be great. It'd be great if that kind of went away as a problem. And it's funny, the chemistry for sodium ion is actually the opposite. It actually is kind of fire retardant. So any fire that broke out, it would actually have the opposite effect and tamper it down. But you have sodium, you're not as energy dense. So it could be useful in certain applications, but it's difficult if you want a long range battery, a very efficient battery, and a battery that lasts for a really long time. So each of these things has pros and cons. I would say there's a ton of research going into each one, plus many more that I didn't even list. And we will see breakthroughs. We'll see economic breakthroughs, technological breakthroughs, and those are coming. Now, are they coming tomorrow? Maybe, but probably not. But they will be coming in the next several years and decades.
Man, so much happening in that space. It's incredible. Before we go to our next question, though, let's have a word from our sponsor, Enverus. The energy industry faces challenges every day, and events of the last 2 years have caused disruptions like never before. Companies in the energy industry need actionable intelligence and a single source of truth that brings all the data together. Enverus is the energy specialized technology partner that provides intelligent connections for the global energy ecosystem. Only Enverus has the analysis, people, experience, and industry scope to connect the right data and information in the right way to discover missed opportunities and deliver fast outcomes. Find out more at Enverus.com. That's Enverus.com. Well, we're back. Bernadette, I want to follow up just with a hypothetical, and if you don't want to answer, you don't have to. What if there aren't any breakthroughs? What if these technologies just keep staying around the corner for, say, the next 20 years? What does that mean for the transition's progress? I mean, does that just kind of stop us at a certain level of transition, or how would the renewables industry continue to progress at the rate it's progressing?
That's a good question, and really a good thought exercise, because I would say, absent these breakthroughs, you'll have more oil and gas. You'll have renewables continue to be a part of the mix, but you'll need things like natural gas to backstop in the power sector when it's not windy or when it's not sunny. If we can't store that power when we have excess power, it means the grid has to balance in real time, and we have to be able to basically backstop with natural gas or nuclear or other options when that renewable resource is not available. So power, it would definitely be a big deal. Electric vehicles and other parts of the sector or the energy mix, I would say really it probably comes down to supply chain. So if we don't have breakthroughs, I think there's no way that we hit these aspirational targets that many governments have set. Meaning, are we going to stop selling combustion engine vehicles in California? No, not if we don't have some of these breakthroughs. Are we going to be able to move natural gas out of new builds in California or other places? No, we're not going to be able to do that. So I would say a lot of the targets we have today are aspirational. They're based on some of these breakthroughs actually happening. If that doesn't happen, the energy mix probably looks a lot like it does today. The overall energy industry will be bigger, but we'll still be heavily dependent on oil and gas. And we'll have renewables and EVs and things like that on the fringe because they're not reliable enough yet and they're not cheap enough. And you also have supply chain issues, right? Or do we have enough of these metals that we need from, whether it's, again, if it's cobalt or nickel or copper, even lithium, right? Do we have enough of this to continue to grow the mix like we have? Probably not. Yeah. And so absent those breakthroughs, the world's going to look a lot like it does today, maybe even a little minus some renewables because of supply chain.
Well, you stepped on my next question, but that's good. That's actually, it leads into it. The minerals, right, is so critical. And you've talked about several of them, lithium and sodium and vanadium and all these. My gosh, there's 24 of them. When you look at the projections for the increases, the rates of increase in demand for these minerals, lithium is the example I always refer to. The IEA just a year ago projected that we're going to have a 900% rise in demand for lithium by, I think it was 2032, and 4,000% by 2040 in order to meet the goals of the energy transition. What is Enverus's view? I mean, those are incredible rates of growth, right? I mean, lithium's the most extreme I've seen, but still, every one of these minerals is going to have a very rapid and substantial ramp up in supply in the coming years. Are these industries, the mining industry, going to be able to meet that kind of demand increase?
I would say you look at it today and the answer is no, meaning there aren't solid plans to actually hit those numbers. And you mentioned lithium. Copper is not quite as bad, but it's pretty significant. I think I saw that study from S&P that said we need to double our copper capacity by 2035. That's incredible, right? That would be extraordinary if we were able to do that. And copper is just fundamental to electricity, period. So you look at any single one of these metals, and the world doesn't have a plan yet for how to meet this growing demand as currently predicted, or as it will need to basically materialize to hit these net zero numbers that everyone's targeting. So I think the short answer is no. We're not on a path yet to do that. We don't have the mining sites identified. On top of that, majority of the capacity of these metals today is in places that are not friendly to the US.
Right.
So it's places like Russia, it's places like China, it's places like the DRC, right? It's places that are tricky and can be used as economic weapons. Very similar to what you're seeing right now with Russia and Europe with the natural gas supply. So everywhere you look, this will be a challenge. And so this again goes back to, I don't think it's a transition. It's not this smooth, linear progress towards the next milestone. It's going to be very volatile. It's going to be very blocky. It's going to require some of these technological breakthroughs. And we're going to have to figure out supply chain. And that might be the biggest risk. We haven't figured out supply chain yet. And if anything, it appears to be getting worse.
Yeah, so on supply chains, obviously, for a lot of these minerals, I mean, it's not completely dominated by China, but the processing, for example, for lithium, mined lithium, mainly takes place in China right now, and supply chains for a lot of these products go through China at some point. And that's, of course, a risk. I think everyone recognizes that's a risk for the United States. And I know the Biden administration last summer launched what the president was calling a whole of government approach to try to onshore some of these mining and supply chains for these metals, and also form alliances with friendly countries, like, for example, Chile, which just had an election that was probably very positive for maintenance of flows of copper and lithium out of their country as well. What does Enverus see? Is there progress being made in onshoring these supply chains and issuing permits for new mining operations in the United States to try to help speed this up?
Good question. There's some of this in the IRA. So things like incentives that hinge on a certain amount of the raw materials being sourced in the US or the final product being constructed in the US. There's some of these kind of friendly nation agreements that are popping up. We're seeing more of that. I think the tricky part is 85% of rare earth metal processing is in China today. So this is an uphill climb, right? That for all these metals that we're going to have to deal with. I would also say it's a bit of a catch-22. So these incentives and these rules that came out of the IRA and others to basically incentivize more production in the US could also, if there's a slowdown there, if it doesn't happen as quickly as we need it and the materials are not available, you could actually have the opposite effect of actually slowing down adoption rates for EVs. Right? If you can't, so think of it, if I can't go out and buy an EV that fits these criteria today and I don't get that tax credit, do I still buy the EV?
Yeah.
And so some of those things are, I think, a real risk. It's this catch-22. We want to bring a lot more of that domestically or within nations that we are friendly with. But to do that might very, very well mean slowing down the adoption and the whole process. And so that, I think, is also one of the risks that we're seeing right now.
Boy, tough situation, man. I've written a lot about these minerals, and it is a very difficult thing. So let's talk about the energy crisis in Europe, from one controversial topic to another. And I shouldn't laugh about it. It's a terrible, terrible thing happening in Europe right now. It's very difficult. They're particularly where natural gas is concerned. Russia just shut down Nord Stream 1 entirely, they say indefinitely now. Gas prices are just out of control over there. Where does Enverus see this situation heading, particularly where natural gas is concerned?
This is a tough market. So I started my career in natural gas back in 2007, and I followed it all the way through the shale revolution to price collapse in 2008 from $14 an MMBTU here in the US down to sub $2 for certain periods of time. I think the important thing here is broadly for oil and gas, this impact of this Russia-Ukraine crisis really cannot be overstated. In the world, even if there was a ceasefire and a peace brokered tomorrow, the world would not go back to the way that it was. So Russia being top 3 oil producer, top 2 natural gas producer, and the largest exporter of natural gas globally, this is a big deal. And if we think shorter term, the pain certainly is more in the short term. So Europe filling storage, meeting winter demand, this is going to be a tough winter. I think by all accounts, this is going to be a tough winter. You're already seeing manufacturing shut down. You're seeing a shortage of fertilizer because natural gas is a huge input into fertilizer. And that impacts not just Europe, but globally, right? If you're looking at Africa, at famine, and some of these things that we're seeing, these global events have a ripple effect and they impact everybody. And I think it can't be underscored how important and how big of a shift this is. So what happens next? I would say, in a nutshell, natural gas prices are not going back to $2 or $3. They're not going to be $9 forever. And I'm talking Henry Hub. Europe is orders of magnitude more than that right now.
Oh my gosh, yeah.
And it's dramatic. If you saw prices over the weekend, we're seeing prices in the hundreds. We're seeing $90 prices easily. Once you start to see that price run up, there's almost no limit to how high that price can be. And so that's scary. And I think the winter is going to be rough. Now, longer term, what we do see commodity markets respond. We'll see additional gas production out of the US and sent out on LNG cargo ships to serve markets like Europe and some of the markets traditionally served by Russia. You'll see other kind of greenfield LNG projects, whether it's more Australia, more Qatar, more Mozambique, right? Leviathan. There's projects all around the world for natural gas that make sense. They were slowed down. They weren't happening when prices were $3, but now it's a whole new world. And a lot of these projects are economic again.
Yeah.
So I would say medium to long term, the world will supply enough natural gas and there's enough gas out there. But the short term, Russia exporting what used to be 20 BCF a day of gas is a really big deal. And it's a lot of pain, especially for Europe and those nations coming in the next, call it 18 months or so. After that, I think it'll start to look a lot better. But right now it's you can't really see an easy end in sight.
Yeah, and in the shorter term, of course, President Biden made commitments on behalf of the U.S. LNG industry to ramp up, its exports into Europe back in March. We're already pretty much at capacity, though, here in the United States in terms of being able to ship cargoes to Europe, aren't we?
We are. So we today are sitting around 12 BCF a day. We have one of our big terminals, Freeport. There was an explosion on site. They're still working through repairing and returning that facility to full service. So we're bottlenecked today. But the good news is Calcasieu, that's the latest terminal that started service. That's ramping up. There's other projects in the queue that are coming next. So we track every project. We track the backer. We track who the contracts are being held by. And we see there could be 26 BCF a day of capacity out by about 2026, 2027. So that's coming. It's not coming tomorrow, which is the bad news. Right. And for today, call it 12 and a half BCF a day we're exporting, and we're pretty much bottlenecked.
Well, as you mentioned, of course, these price explosions in Europe have impacts, ripple effects all over the world. And here back in the United States, prices have gone very high for natural gas. We've seen a fall in crude oil prices over the last month and a half. Where does Enverus see between now and the end of the year? What's the price outlook we're looking at here in the United States for both oil and gas?
For gas, I would say we're probably going to hang out where we are, right? We're going to be relatively high, call it $6 to $9, huge volatility, right? Depending on the numbers of the day. For crude, it's a little trickier. So we also just saw OPEC yesterday announce they're going to pull down production by about 100,000 barrels. So it's a token amount, but it really just signals that they are willing to manage that price really closely. And so while fundamentals might say a crude price should be $70, we're probably going to hang out in the $90 to $110 range. And I would say that OPEC response is also a response to the demand side countries, kind of the rhetoric and the conversation that's being had about forming alliance and essentially putting a cap on Russian oil prices in particular. So this, I think, is just another signal that oil markets are fundamentally geopolitical. They're also very fundamentally tied to macroeconomics. So if you see a recession in the US, you start to see that price come down. If you see recession in Europe, if you see manufacturing shut down and job unemployment numbers spike because they don't have enough energy supplies, all of those things are actually bad news for oil demand. Yeah. And oil demand is, again, very tied to macroeconomics. So oil's tricky. There's a lot going on out there that says the macroeconomy may suffer, and that's why you've seen oil prices take a hit in the past several weeks and months. But OPEC's going to manage that closely. I don't think we're going to return to the $60 or $50 or $30 oil prices that we saw anytime soon.
So for gasoline consumers, all of you folks filling up your tanks at the local gas station, you're probably gotten about as low as it's going to get. It might go a little lower. I guess it could go a little lower here over the next few weeks, right?
Just a little bit, but not much. Yeah, it's the end of the summer driving season, so demand naturally tapers off a bit.
Right.
But again, I think that's part of why OPEC's pulling back a little bit of supply. And then I think I would always remind everyone that a lot of the price you pay at the pump, a lot of that is taxes. So it's going to depend on where you're at. But there's a floor to how low those prices could go anyway. Yeah. And the oil price is only a part of it.
Yeah, California, I think the taxes on gasoline in California as compared to Texas, there's $1.45, I think, differential, higher in California than in Texas. So yeah, if you're in California, it's not going to get very low for you. Bernadette, I want to thank you so much. This has been so informative, and I hope you will be willing to come back again in the near future. This is just fascinating.
Absolutely. Anytime. I love to talk about markets, and luckily or unluckily, there's always something going on that we can talk about.
There certainly is. Well, that's the end of this episode of the Energy Question with David Blackmon. Thank you for watching, and we'll see you next time.